Hello, everyone. Welcome to yet another episode of On the Margin. Today, we're joined by Samer, who is a payments expert, having spent the last 13 years in the payments industry. Samer, can you please tell us a little bit about yourself?
Thank you, Boaz. Well, first of all, thank you for having me on the show. I'm really glad to be part of this conversation. To talk about my background, I was born and raised in Jordan. That's a developing country in the Middle East, and have, as you mentioned, for over 13 years now, been working in the payments industry, where I held various commercial positions in three major payment companies. But to take it a step back, that the first experience I had as a professional experience, that was back in Jordan with Cashew, which is a payments company that offered prepaid vouchers for users to shop online. Then later on, I have moved to Turkey, where I lived for 4 years and worked for EasyCo, leading their international business operations. EasyCo's core product, as it was back then and still is today, is to support online businesses by having them offer their users installment-based payments. And lastly, for 5 years now, I've been living in the Netherlands, working with WorldPay as part of their crypto team. By that, I mean, as a crypto team, is that we do support crypto businesses by having them accept credit and debit card payments from their users who are willing to purchase crypto. And I think throughout this whole experience, if there's one key takeaway I have, is how significant payment habits do differ around the world, which is something I'm really looking forward to chatting with you today about.
I think we can start right at the beginning. You mentioned that when you're working with these prepaid vouchers in Jordan, there was some sort of story that you shared with your dad, who's an avid user of these products. Can you tell us more about that?
Indeed. And I think there are a couple of such experiences or stories that I had that date to even before I have started my career in payments.
Mm-hmm.
One of them dates back to 2010 or 11, where I was still a university student. And my father back in the day used to invest in stocks using the traditional physical broker, as in an office that they would set up an account with and have to physically pick up the phone and call them whenever they wanted to execute an order. Now, he has heard or learned that if he rather invests online or use online exchanges to invest in stocks, not only he can execute his orders faster, but obviously he would have access to more markets and more options as a trader. So him being not that avid with technology, he relied on me to find a way for him to set up his account online. And the challenge that we faced at that time was that his credit card, which is obviously issued from a bank in Jordan, got declined on multiple foreign exchanges that we have tried to deposit on.
Okay, now that you're in the payments industry for 13 years, do you have an idea why your father's card got declined so
100%.
many times?
Yes,
Because
that's a very good question.
most consumers have no clue why they get declined.
That's a very good question. And even I wouldn't have known the reason until I have joined the industry or had some experience with it to an extent. In a nutshell, because this topic can have many, many angles to it, but the simplest way to look at it is, say you are the bank in Jordan that has issued the card, or more specifically, working at their fraud department. The way that you would set your fraud tools is to expect Jordanian consumers or the card holder who is Jordanian to use that card on outlets, regardless if it's physical or online, that are based in Jordan. Why would you set it that way, or why would the risk mechanism look at it this way? Is to avoid or to protect their consumer first. So in the case that the card got stolen while the cardholder was traveling and it was used abroad or was stolen and distributed online as the card
Hmm.
number, the CVC, the PIN code, and such was distributed online, and then people are trying to use it on foreign websites. This is the basis of the risk mechanisms that would end up having or resulting in a high rejection ratio for a card to be blocked on foreign websites.
Okay, so all right, let's take a step back. Your dad, he was trying to deposit money on a broker website using his card. It didn't work, got rejected for what you suspect is fraud reasons. And then what happened?
Right. So back then I went online, tried to search, and found out about a prepaid card issued by a company based in Jordan. It's
Hmm.
actually a prepaid voucher that you can go to a bookstore or a mini market and literally pay in cash. You would get this voucher. You would scratch the back of it to get a 14-digit number that you would later on use on Cashew's website to top up your Cashew wallet.
Hmm.
Then, as a final step, you would go to, or we went to, the stock exchange website online that accepted Cashew as an alternative payment method and have finally topped up the account. Now, the challenge, or what we have realized, is while we started with $5,000 when going to the market and paying the $5,000 in cash, keep in mind we had to buy 10 different vouchers, as the highest denomination was 500 at the time.
Hmm.
But my point is, we ended up on the website before we have even made one trade with a balance shy of 4,500, I think, at the time. So we
Okay.
paid fees of over 10%.
So the bank protecting your dad from fraud cost you basically 10% of your investment.
That's exactly what happened. Yes.
Okay. And that must have been an experience that you kept in mind for your further career in payments. What happened then? That's when I think that's probably one of your first experiences touching the complex world of what is known as high risk payments. What happened afterwards?
Yeah, so there are multiple other experiences, but I also want to highlight that from that experience by itself, obviously, one point that I've learned is that while alternative payment methods are essential in some markets, they often come with higher fees. And I can
Hmm.
understand that, or we can talk about the reason why in most cases alternative payment methods can have higher fees. Looking at this example, there were multiple parties involved. Look at the
Yeah.
bookstore, for example. This wouldn't
Yes.
exist in a traditional payment. And when we say traditional, we're thinking of either credit or debit card payments, or also, as well, a bank transfer. But also, later on throughout my career, it made me think, or maybe from living abroad in developed countries, it made me reflect and think that while for someone in a developed country, the whole concept of alternative payment methods might come strange or unnecessary, they are, as alternative payment methods, extremely essential for developing countries where the financial system or infrastructure is still not as advanced.
So I wanted to ask you a little bit about that. What was the financial environment in Jordan like at the time? Was it a case of the bank is blocking this because they're not very sophisticated in their fraud tools? Is this a case of perhaps some level of capital controls, or is it really just about sophistication?
I would, obviously, at the time when I had that experience, I wasn't yet working in the payments
Of
field.
course.
So I wasn't looking from that perspective. But looking back at it now, I would say the main reason would be that it wasn't caught up to the sophistication. The whole ecosystem, financial ecosystem there, from financial technology system actually, wasn't caught up to the sophistication it requires. Now it's much more advanced,
Hmm.
still lacking in a sense. But yes, I would attribute it to that factor.
Okay. And you ended up working for this company, which was doing these prepaid vouchers. Can you tell us a little bit more about that? What were the common consumer use cases? How did that business look like?
Sure. And that's very interesting and would make me, or does make me think way back, that was in 2012 or so.
Yeah.
But joining it only from the perspective of someone who has used the card to help the voucher, sorry, to help their father
Hmm.
invest online. It was really eye-opening to see how far some consumers can go, only to manage to finally pay for something online.
Mm.
And it also has shown me how there's a lack of education in the region. So some consumers would call the headquarters of Cashew asking about a specific payment they have attempted on one of the merchants. Now,
Mm.
obviously, we used to help them try with our relationship management team to connect with our contacts at that outlet or website. But it was really eye opening to two things mainly. One, of how desperate people were back at the time in that region to pay or shop online, and they
Hmm.
lacked, or the traditional financial system there wasn't as caught up, so they lacked options and had to turn to prepaid vouchers. Even in some cases, since Kashi wasn't only operating in Jordan, but in the whole Gulf region, Middle East, we had some clients who would literally go to the shop with over $100,000 in to buy vouchers where the highest denomination is 500. To in most of those cases, it was online investment for stocks. While this wasn't the only type of websites that use Cashew.
So I think that's a fascinating story because thinking back to 2012, in Western Europe, you know, America, I don't remember paying for stuff online being that hard, right? It was something that maybe people were a little bit scared of because they didn't do it as frequently as they did today. But it wasn't that impossible to actually get a transaction to buy something online. Whereas it sounds like in many parts of the world, it was super hard. Maybe it still is.
That's very true. And I even, from this sense or this perspective, I myself have had an experience where I think I'll say the experience, but then it highlights how desperate a consumer can be when they have an item or something to purchase online, and the only thing blocking them is finding a payment method. The money is right in
Mhm.
their pockets or bank accounts. And that one was, I think, in 2008 or so, with the rise of social media, and with it, the world opened up to e-commerce shopping. And I was one of those people where I wanted to buy a graphic cards online while still living in Jordan
Mhm.
from a specific foreign website again. And the only way I have managed to find, since I was a minor and couldn't have access to a credit card, now obviously the second challenge would have been, would have the credit card been accepted? But who knows? At that time, what I have done, I still remember it until today, is I found a person who was on, whose contact details are on MSN Messenger, who would accept payments via Western Union. So I went to Western Union, where I would transfer fiat to that person's address in Egypt, and then they would provide me with Ucash vouchers. Now, Ucash, the name is very similar to Cashew, that was a UK-based payments company that does the exact same thing as Cashew. That's the similarity in the name. So, to recap, I used to go to Western Union, transfer the fiat to that address or that person's name in Egypt. Then they would log in online on MSN Messenger, provide me with Ucash voucher codes, which I would use finally on that website. And I'd leave it to you to assume how high the fees were or how much I was left with. But I think one key takeaway from this whole experience, other than what we already mentioned of how desperate users can get trying to find a way to shop, is the responsibility on the websites or online shops to offer more payment options, because all what they have invested in user interface, marketing, having the availability of the products to attract the user. I'm there, I found my product, but then I couldn't simply find a way to transfer my money from my pocket or bank account to them.
So that really sounds quite a painful customer experience. Are there still those types of experiences in Jordan, and what workarounds do you have? Or is the situation a lot better than it was?
Unfortunately, I do not know the exact answer because of the reason that I have left the country 12 years ago now. But I can tell you one thing, that whenever I visit Jordan, I see two things. One, that when a family members order something online, in most cases, they choose to pay with cash on delivery. This might tie to a different point. Maybe it's not the financial infrastructure or the lack of, but user preferences and payment habits. But I also see that whenever a group of friends and I go to a restaurant or even go for shopping, it's in 80% of the cases, people prefer to pay by cash rather than take out their card and pay on a physical point of sale terminal.
And why is that? Are people worried about getting declined in the restaurant? And there's some kind of embarrassment associated with that, isn't there?
I think it would mainly tie to the fact that this is what they have been used to. As I've thought about this a lot, and I think it came from the fact that banks only recently, and I say recently looking at the long scale, in Jordan started by default offering a card when you open up a bank account. So people used to open a bank account mainly for savings, checking account, but from two angles. The banks didn't issue cards associated to the accounts by default, and two, most shops didn't have terminals to accept card payments. Now this, with every visit I do, and I visit there yearly, I'm seeing it's becoming more and more common to pay by card, but still nowhere as whether in Turkey or the Netherlands or any other foreign developed country I've been to.
So you've touched on Turkey. You've had some years of experience there. Can you tell us what you got up to?
Sure, yes. And this was back in 2016. And from day one with EasyCo, or as someone who has lived in Turkey, I've realized one fascinating thing, that every shop I entered, now speaking first from a resident of Turkey, when you look at the cashier, let's say you're at a clothing brand store, you want to do some shopping, you have came to the cashier, arrived at the payment point, you would see right next to the cashier a list of all installment plans logos. So what are those? Every bank in Turkey, on their own credit card, they would support an installment family or an installment plan. Take a look at Guarantee Bank, for example. That's one of the top 3 banks in Turkey. If you look at one of their credit cards, you would see 3 logos on the card. 1, the bank name, that's expected. 2, the card scheme name, that's Visa, MasterCard, or such. So far, so good, as we are used to. But 3, you would see a name or the logo of an installment plan. In the case of Guarantee, that's bonus. What that basically means is, since you hold this card, you can pay by installments for up to 12 months in any shop that supports bonus installment plan, which is basically all of the shops. I've rarely came across shops that do not accept those installment plans. And there are over 8 or 10 of these plans. And this was fascinating to me, and I've only understood it better after working with EasyCo, the whole concept of installments.
So who's the main user of these cards and these payment plans?
That's a very good question, and I think numbers would hit the nail on the head with this one. Is if you look at all the data collected, you would see that from the whole of Europe, if you look at each country and the credit card usage, Turkey would rank as number 1, as in 80% of all online payments are done via credit cards. And in 65% of those cases, users opt in to pay by installments. So I think this answers the question. It's almost everybody in Turkey would opt in for installments where it's offered in 65% of the cases.
Does that have to do with the volatility of the Turkish lira and the depreciation we've seen over the last few years?
That's a great question. So I think it ties to that as one of three main aspects to this. So one is the financial aspect, or if we look at high inflation, as it was over 50% last year in Turkey and a bit north of 70 or 80% in 2022, which obviously would mean or would result in lower purchasing power. So people would find it very difficult to make large purchases in one go. So they would rather split the payment over a period up to 12 months. But also you can look at it still on the financial point as the high cost of living. So even housing prices have went up, health insurance, utilities, transportation. Now, while those cannot be paid in installments, but you can put yourself in the shoes of somebody living in Turkey, you would see that, fine, these essentials I cannot pay for by installments, but I can split my budget in a way where I would pay the non-essentials in installments. This way I can balance my monthly budget without overburdening it.
What sort of APRs are people paying there? Because if these are market rates and inflation is 50 to 70%, then the APRs may be crazy high.
That's very true, but also reminds me, so I don't have the numbers off the top of my head, and the numbers I have dates back to 2018. That's when I left the country and EasyCo. They were depend on how many months you would split the payment, as you have the option between 3, 6, 9, 12, depending on different variables, but it used to be up to 10 or 11%. Now, I would guess it's higher now, but I don't know the numbers. However, this reminds me of a fact from my friends who are still in Turkey, that people even started to feel incentivized to pay by installments. Since the case has been the last 2 years, the bank is the one ending up paying higher interest rate, even than the rate they asked for the 12 months installment split, if that made any sense.
So basically, the banks are now losing there?
In that sense, and the last 2 years, yes, that I have heard many stories on people preferring to buy large purchases on 12 months installments, regardless the interest rate, as it has proven to have benefited them. That's the last 2 years. Obviously, we don't know how the future will look like.
Interesting. I think that's. I mean, it's a very interesting story, right? Because people effectively what they're doing there is not so much an installment plan the way we know it in Europe, where it's a consumer finance part. It's more of an interest rate arbitrage or a hedge against inflation, where they're choosing to spend less money today because it's going to be worth even less in the future. So they'd rather push out the loan as far as possible.
That's a very interesting way to look at it. That I bet you when installments came to the scene back in 1998 in Turkey, that wasn't the concept behind it. Mm-hmm. But indeed, and neither when I was living in Turkey, this wasn't an angle I would look at as a consumer. And I'm talking between the years 2015 to early 19. But only recently I've heard this when visiting Turkey and meeting some of my friends. So this is new, but an interesting way to look at it. I think we've spoken about the financial aspect, but also to someone from abroad or outside of Turkey, it's worth mentioning that other than the financial aspect to it, there's a cultural preference for consumption in Turkey. Or let me reword it better, there's a cultural tendency towards consumerism, especially in the urban areas of Turkey. So people would prefer to have the latest gadget, or if a couple got married, they would almost always prefer to have new furniture for their home, even if they couldn't afford it. And with this, you can understand or you can derive the fact that installments become key. Because if you're facing inflation, higher cost of living, but at the same time it's in your culture, you want the latest gadget or the latest furniture, then installments would be the only way where you can get these products without paying the full price up front.
What do you think about this trend that was very present 2 years ago, where people were looking at companies of the likes of Klarna in the US and in Western Europe, and they were saying, okay, buy now, pay later is the future of consumer payments, it's the future of consumer finance, when actually installment-based payment was around for way longer than that, and it's kind of the same thing, right?
That's very true. I think, and I'm not an expert on this topic particularly, but at least I have experienced it from Turkey's and installment perspectives at EasyGo and living there as a Turkish consumer, and then moved to Europe and being in the payments field now, hearing about buy now, pay later as if it's a new thing or it's going to be the future. I believe, and that's my personal opinion, it works in specific or certain cultures, while not so much in others.
So do you think that what does that tell us about the success of buy now, pay later in the West?
Well, again, that this is not a topic I'm an expert with, but I can see how some cultures would prefer to, because the whole idea of buy now, pay later, as I understand it, is you want to buy something today, which you cannot afford at this specific moment, but the fact that you can pay for it later enables you to move on and make the decision.
There's various buy now, pay later products, but I might be oversimplifying here, but I think a buy now, pay later is basically just installment payments. As far as I know, it's basically just installment payments. You buy something and you either pay it not now, but in whatever, 30 days, or you pay, percentage of it in 30 days, another percentage of it in 90 days, etc. So it's effectively the same thing. It's just for some reason in the US and in Western Europe, it hasn't been as prevalent. And people in the US in particular, they love consumer credit, but they've been using credit cards, which are revolving credit, which is not installment based. It has compounding credit, whereas installments, I feel like installments are a little bit easier to understand, right? You understand that you have to pay
100%. And I think, sorry to cut you there, but
go for it.
I've always looked at installments in Turkey as a method where banks have found a way to simplify to the average user or consumer to understand the minimum credit card payment. So instead, so this way, having a logo on the card and then seeing the logo in the shop and then seeing the 12% or 10% for 12 months interest, this makes it much more simple for someone to understand rather than, because it can be looked at as the same thing as buying on credit card, like the way they do mainly in the US, and then paying your minimum monthly payment. In a sense, interest rate would differ. But I found that Turkish banks have found a very smart way to simplify this for the users.
I think also people are less likely to get burned on installment. I mean, they can probably overspend anyway on installments, and they can end up looking at their monthly statement and going, wow, we have to pay a lot for installments this month. But it doesn't have that aspect of compounding credit that credit cards do, where you bought something and you made the minimum payment for a few months. The next thing you know, you look at it and you owe loads of money. You don't understand where that came from or how that happened. There's more of an upfront aspect to it than with credit card payments.
Indeed, the consumers in this perspective are more protected, at least.
Do you think it has to? And I wonder whether they've become so big, and Klarna is from Sweden. I wonder if they've become installment payments, buy now pay later, has become so big in Europe precisely because it's a bit of a more manageable tool than the potentially explosive compounding credit, revolving credit situation that you get with credit cards.
I would guess so. That also tying it to the cultural preferences or cultural habits, where somebody from Western Europe would be more conservative, having a financial plan, some goals, monthly expenses, and try to avoid putting themselves in such a situation where it gets out of control. That would be my guess.
Yeah. Whereas in the US, people are super happy to work with the credit cards. People are a lot less shy about credit there.
That's very true. I think the latest statistics shows that on average, a US person holds no less than 8 credit cards.
Yes. It's a very, very competitive consumer credit market. Okay, so I think we can slowly move on to the topic of payments and crypto payments in particular. How would you describe the world of crypto payments to someone that knows nothing about either crypto or payments?
Oof, that's a tough one, but I'm going to give it my best shot.
Okay.
Right, so when we say crypto payments, two things comes to mind. One, are we talking about paying by crypto, or somebody who's online trying to acquire crypto via the traditional payment means of buying crypto via fiat? But I guess from the name, most people, their minds would go to paying online via crypto. And speaking about that, I think we have to define some terms, because it all would boil down to, at the end, on defining Web 3.0, but I'm going to take it step by step. But before we speak about Web 3.0, let's take Web 1.0. That is basically read-only websites. If you would recall back in the days, the earliest version of Yahoo's news website. It's read-only, there's no interaction whatsoever. Then later on came Web 2.0. That's what basically we are used to today, where it's mainly user-generated content, more interactive. You can think of Facebook, YouTube, dozens of other examples. The internet that you can say that we're used to today. Now, Web 3.0, and that's where crypto payments become more relevant, is the latest version of the internet, where it's based on decentralization, user control, and data privacy, all made possible, or wouldn't have been possible actually, without blockchains and cryptocurrencies. I'll give you a couple of examples here. You can look at one of the popular browsers called Brave. Now that one is totally on web, or considered as Web 3.0, since user privacy is fully protected. Users can be anonymous, and by generating content on the website, they are rewarded with crypto tokens. Or take Aave, that's AAVE. That's a decentralized crypto platform where people can simply log in via their crypto wallet to lend or borrow crypto. So again, anonymous, there's no sign up, there's no central authority.
Okay, I kind of get it. There's blockchains. People can interact on blockchains, and they can lend and borrow money and do all sorts of stuff much easier. But don't blockchains come natively with payments functionality? Why would they need a company like WorldPay? What do they need there?
Perfect. And I'll talk about WorldPay in a second, but first on the main part of your question. That's very true, but I think the main or the primary challenge in getting users to adopt cryptocurrencies, like take stablecoins, for example, as a payment mean on Web3, has always been a steep learning curve. from, let's say, the perspective of setting up your own crypto wallet, or, for example, fear or the stress that comes with the fact that if you lose your private keys, you will lose or you would jeopardize your crypto wallet and all the funds in it. Even another example might be if now today, without any of the apps, I want to transfer some Bitcoin to you directly, I would need you to provide me with your Bitcoin wallet address, which is usually over 20 alphanumeric digits or more, all randomized. And then if I mess up with one of those digits, then the Bitcoin or any other cryptocurrency have been sent to somebody else with no way to retrieve it. So obviously, this is why I called it a steep learning curve, to get used to all of these things. And that's why for the average user, all of this causing challenges in having higher adoption. But what I think would be crucial to boost adoption is for developers, and this answers your question on why do we need those websites. It's crucial for developers to simplify the front-end experience. So they would keep the blockchain in the back end while they bring all the benefits in a simplified user interface where a user wouldn't have to deal with all the complexities, yet benefit from what the blockchain has to offer. Okay. And I think this will be the way forward.
And what role does WorldPay, and you in particular, play in this?
Right. So first, on looking at the crypto business as a whole, we have been, since 2015, supporting the aspect of users paying in fiat to acquire crypto. That we have been doing for 9 years now. That I would still put at Web 2.0 because we're talking about traditional payment methods. Yes, the user is getting crypto. But then when it comes to Web 3.0, we have been working very closely with the regulators, as the biggest challenge for us now has been that the regulators has not made up their minds on what license would be required for a business to accept or deal with stable coins or cryptocurrencies. So this is a hurdle that, the way things are looking, we will overcome very soon. And there has been advancements in it. Like 3 years ago now, or 2, we finally were able to get all the approvals required in the US to settle our merchants in USDC. USDC is a stable coin.
Yeah.
Yeah.
So why is it not just a money service, or what's it called, the MSB in the US, money service business license?
That's very true. And this is the reason I say only in the US we are able to settle in USDC, because the regulators there agreed that stable coins can be can be under the umbrella of MSBs. That's very true, which is unfortunately, or until now, is not the case in the UK or Europe or rest of the world. That's why we are only able to offer that service for businesses in the US.
And in the EU, wouldn't with like an electronic money institution EMI license, wouldn't that cover things? And if not, there's new upcoming regulation around this in Europe, right? Can you tell us a little bit about that?
Yes, that's right. I think with this regulation, at least we're hoping it will become much clearer, and we're seeing signs that it will become clearer. But as it stands today, it depends exactly on the type of business you are trying to do with stablecoins. But for WorldPay being licensed by dozens of regulators, we need to be 100% sure before we take any step. And that has only been, in our case with USDC settlement, has only been clear in the US or with the US regulators.
Okay, so if I understand it correctly, there's basically two businesses, kind of. There's one, the standard Web 2.0. Business wants to sell crypto online. I am a crypto exchange. I am some sort of crypto distributor. I want to take credit cards and give you crypto. That is one business. And then there's the other business, which is I want to be able to receive crypto payments. Am I understanding this correctly?
100%. as in receiving crypto payments for me to offer my services to shoppers on my website and such.
How much demand do you think there is for this second one?
Well, I think it's becoming larger and larger, and I would point out to one recent example with a company called Sling that I have came across recently. They have offices in the US, the Netherlands, and the UK. What these people have managed to do, and they have amazing brains coming out of traditional finance, they have finally managed to tackle that challenge I was referring to of hard access. It's not as easy to get into the steep learning curve. So they have managed to find a way to have an app very similar in utility to Venmo or Cash App, and the user face that is traditional or familiar to the traditional users to traditional finance, but in a sense, leveraging blockchain in the back end, all the stable coins to maximize value, as in reduce the costs, to have people remit or send peer-to-peer money transfers. Even the user obviously it's in the terms and conditions, and if you do a little bit of digging, you will understand that you're dealing with stable coins, but you don't need to be bothered with it. You're depositing fiat, you're sending the money, the other peer would withdraw the money back to their card or bank account.
Yeah, I've actually tried that app. It's a pretty cool app. And I guess the service that you guys would offer is both the on-ramp and the off-ramp, right? Helping people deposit money onto the app, but also withdraw from it.
That's exactly it. And whether by credit debit cards or bank transfers or other payment methods.
I was wondering, what are some of the challenges you face? I could imagine some challenges with regulation, not knowing where the regulators stand, maybe some fraud issues when it comes to allowing customers to pay with crypto or buy crypto. Could you talk us through some of those challenges and which ones are the biggest?
Right. So to pay by crypto, maybe I won't have much details to share, as for now our stance is that we are working with the regulators, keeping a close eye to advancement in the markets, to at least as the first step to understand what license would be required, as even that is not clear yet. But I can obviously talk about the second part of it, which is paying fiat to acquire crypto. Now, keep in mind, I'm part of the commercial team, but the way I see it or I experience it is when we have a new business wanting or willing to work with WorldPay to have us expand their payment options to users around the globe, our due diligence would take quite some time due to the reason that we report to dozens of regulators and do our AML checks, KYC policies, understand what KYC policies the merchant or the website here, the exchange, are doing on their users. Credit risk as well, that's a huge factor, as many people would think, I'll buy Bitcoin with my credit card. If the value the next day goes down, well, it's simple. I call the bank, I claim a chargeback saying it wasn't me, the card was stolen. So you can look at all these aspects and understand the reason why it is not as easy to connecting a physical terminal with a physical shop selling sandwiches around the corner.
So what do you do if someone says that payment wasn't me? What happens?
Well, that's the decision. Right, let me take it this way. A user would go to their bank, they would claim what's called a chargeback, claiming that they were not, let's say their card was stolen. Now this will come to WorldPay's chargeback team as a claim from the issuing bank, the bank that issued the card, explaining the situation. And our chargeback team, as any other acquirer would do, would have a conversation with the merchant, the crypto exchange in this case, and collect proofs to try to defend the case. For example, we can, and in the case of crypto, it's actually much easier than other cases due to the reason that the blockchain is open, that's decentralized. So we can see where the Bitcoins were sent. And if the Bitcoins were sent to a wallet address given by the user has underwent KYC, then it's much easier to defend, or at least to remove the liability from the exchange to whether they have delivered the crypto or not.
So with regards to these crypto payments, there's been quite a lot of news lately that a lot of the people involved in the crypto business are having trouble getting financial services. So, it's partly with regards to money service businesses like PSPs, payment service providers, etc., but also with regards to just simply banking partners. Right? There's been a couple of Fed enforcement actions this year in the U.S. against Texas Union Bank and Customers Bank and other banks that were known to offer crypto services. Do you have any color around this? Do you think that the people you talk to on a day-to-day basis are increasingly finding it hard to get serviced, or is this more of an isolated incident?
No, that's a very good point. And we've witnessed it especially throughout the last 2 years, that it's becoming harder and harder. Or let me put it this way. It got to a point where it got extremely hard to find banking partners in the crypto industry, whether to do settlements or such. But throughout the last 6 months, it has been improving.
Mm-hmm.
But definitely there's merit behind the fact that, especially when the crackdown happened with Signature Bank and the others all getting shut down, that did cause a huge issue back then, where we and everybody else in the industry had a challenge finding banking partners. But I'm seeing the last 6 or 3 months that this has been improving. And I am personally hopeful that with the new administration, after the voting this November, we would see some more flexibility.
Mm-hmm.
At least that's what I hope for.
And do these banking challenges, do they primarily impact your clients, or even potentially the PSPs themselves in terms of their willingness to offer services to these clients?
I would say it's the first one.
Okay.
So the way it would impact our clients or a PSP's a crypto merchant is that the payment service provider not having partner bank would not have means to settle the funds to the bank. So let me maybe explain the role of a partner bank in this sense. So the payment from a credit or debit card to a crypto exchange would still go through, but the challenge would happen on the other side of it when WorldPay or another PSP have collected the funds from the user's credit or debit card, and then it's time to settle to the crypto merchant. This is where partner banks are needed, and these are the ones that got affected the last 2 years, or we saw that there's less willingness to support such business.
Mm-hmm. All right, this is a bit of a niche topic. I don't want to jump into it too much, but could they potentially work with non-banking partners? Could they work through EMIs and stuff, or would that not really work?
In my opinion, what would the solution be? Stable coins settlements.
Yes,
100%.
of course.
So similar to USDC, there are many others, but I mentioned USDC since they have been our partner, at least for merchants and businesses in the US. And we have plans to do that as well for Europe and the UK, again with Circle. But first we have to iron out some challenges or
on the regulatory side.
Clarity from the regulators, exactly.
Okay. So Samer, you've been in payments for 13 years. What are some fun anecdotes about payments? What's something about payments that everyone gets wrong?
That's a good one. I think we do have, even at WorldPay, sometimes people calling our call center to sort a payment in. But maybe that's not what you're going after. I would have to think about this one.
Or any curious anecdotes other than people phoning in, or like, some very common misconceptions that whenever you tell someone you're in payments, they think that you do something that you don't actually do.
All right. Well, even for 13 years, I do struggle to explain what I do in a conversation where, let's say, I've just met somebody and I have within 10 or 20 seconds explain what we do. I have lost hope in this, and I just say payments, as boring as it sounds, until they start asking questions. I think it's very complicated to explain it, as most people, like I did before working in payments, I would assume when I'm typing in my card number on a website, it's the website deducting the funds directly, not knowing that there are multiple layers in between.
Okay. It's an interesting one because everyone uses payments, right? But no one stops to think about, well, how does this actually work? How is it possible that my card issued in the UK will work perfectly well in a bar in Spain?
100%.
Obviously, someone needs to work to make that happen, but no one thinks about it.
100%. And just now I did recall that this Saturday I was in a birthday party and I met someone and they were asking, where do you work? I mentioned WorldPay. It was rare that they did recognize it, because usually we are the largest company that you have used but don't recognize. However, this guy did recognize it, and the way he described it is, all right, you guys are, I see your logo for 3-4 seconds after I click pay. You are those guys.
Yes.
That's how he described us. My answer was, hopefully it's less than 3 seconds, but yes, that's us.
And Sam, what are some of the trends that you think are going to happen over the next 3-4 years? What's the world pay crystal ball looking like?
I think, again, since I'm part of the crypto team, all I can think of is how much USDC settlements or stablecoin settlements would solve many pain points for our merchants, including, so think of it this way. We mentioned settlements. We collect the funds from the shopper online. We collect those funds, and then later on we settle them to the merchant. Now, until today, for any payments provider, this is not a WorldPay issue, nobody can settle on transactions that occurred on a Saturday to be settled on the same day. Why? Simple answer is the banking sector is off on the weekends. So assume you're an exchange or any type of business that really relies on liquidity. You don't even have to be in the crypto business, but you can still benefit from getting settled in stable coins via the blockchain, as it's 24/7. There is no weekends when it comes to blockchain. So this, I think, would solve many issues and will open many doors and would increase the adoption in crypto, even to businesses that today have nothing to do with crypto. This will be an entry point to them and people working there to understand the value of blockchain.
Samar, is there any story or anecdote that we should know about? Something that's going on that you really want to talk about, that you really want to share with us?
I think I'll tie it back to in the beginning when I mentioned that there has been a couple of experiences even before I started working in payments that helped shape the way I think of alternative payment methods, the world of payments. And this was in the summer of 2004, where a group of friends, the whole neighborhood, and myself were hooked on an online game. Obviously, we were minors, so couldn't get an access to a credit card.
What game was it?
This is not a very popular one. It's called Doofus, DOFUS, by Ankama Games. And back then, not having access to a credit card, we looked around and found the only way. So obviously, the game is free, but then only until a certain level. To have the full access to the game, you would have to pay. And then we found a cousin of a friend who just turned 18. He's the oldest of us. We accompanied him to the bank, literally 10 or 11 of us. I guess the teller was panicking to issue a credit card to his tied to his bank account. Went back home. Each of us subscribed only until 2 months later to find out that it was a monthly subscription. The guy wasn't that happy. But then it shows, I think, yes, obviously there's reasoning behind, or it proves why banks have limits on age or age restrictions to issue a credit card, because minors might not even know what they are subscribing to or opting in for. But again, the responsibility on websites, games, online shops to understand the demographic of their shoppers and offer them payment methods that suits them. In this case, something other than credit and debit cards.
I think that's a great story and a great anecdote to share, and goes to show how non-trivial it is for people to get access to payments, particularly in the global online world. I think if you were that age today, you might be thinking of lots of different things. You might be thinking of stable coins. Maybe you might be thinking about V-Bucks in Roblox.
True. I know that very well.
You know V-Bucks?
Yes. Via a younger cousin. Yes.
Oh, I was going to ask, like, is that part of the corporate crypto strategy, V-Bucks? But effectively, yes. Like, there's a lot of people who are not fully covered by the payment systems that we come to get used to. And they need whatever they can get. And if it's crypto payments, if it's V-Bucks, if it's, these prepaid vouchers, they want to be able to transact online just like everyone else.
100%. And I think we can even put it in numbers for people to envision that the latest statistics on this was that over 20% of the world are still unbanked. That puts us at over 1.5 billion people. And by unbanked, we mean they don't have access to banks, obviously meaning that no credit or debit cards, the traditional payment means.
Yeah. And that doesn't even include the people who are underbanked, who are perhaps like your father a decade ago had the bank account, but they functionally didn't have it because they couldn't do the investment that they wanted to do.
100%. And to complete the circle, then you can also have the card and not be able to. So you lack the education to use it online, like the case of my father at that time, or you have tried to use it online, but it has failed due to the reasons that we have mentioned.
Exactly. All right, Samar, I think we can leave it on this note. Is there anything else you want to add?
No, thank you very much for your time. I really did enjoy the conversation.
It was a good conversation. Thank you very much, Samar.